Hey, real estate agents, welcome to the Weekly Closer. I'm your host, Jeff Underwood, along with my co-host, Joey Sampaga. How's it going, buddy?
What's going on, Jeff? Long time no see.
Yeah, it's been a while, hasn't it?
It has been.
Well, except for the podcast that we posted last week.
Yeah, that's right.
Hey, we got a great guest with us in the house. Actually, two guests.
Yes.
We have Mike Smith with West USA and Phoenix Native Investments, as well as Greg Douthit with Security Title. How you guys doing?
We're wonderful. I am.
They're excited.
In unison.
It sounds like they're so excited. Well, thank you guys for being on here. This is great. Hey, Mike, why don't we start with you sharing with the audience how long you've been in real estate and what got you into the business?
I got my license in '98. Was just kind of a partying college kid, '97, and going to ASU. My mom was a broker in town here in Phoenix since 1983, and she's like, "Hey, you kind of got the personality for it. Why don't you get your license and get on track a little bit with what you're doing with your life, and quit screwing around, and I'll take you under my wing and kind of show you the ropes and this and that." And she was at Realty Executives back then, and so I got my license in '98 and was still going to ASU for about a year after that, and then started closing deals. And I was like, okay, do I go to school and take a math test, or do I go make $5-6 grand selling a house? And I just kind of ran off with the real estate thing after that, and ditched the college thing.
Well, that's an easy decision.
Absolutely.
For me.
Yeah, I was 20 years old at the time.
So you've seen a lot of changes in the Valley.
Oh yeah. I'm a native. My company's Phoenix Native Investments. I grew up here, born in '78, and so we've seen a ton of changes in the Valley over the last 44 years. Absolutely.
Yes.
In real estate and just the whole Valley in general.
Got it.
God,
We'll get into more of what you're doing with your investments, but I wanted to see how Greg's doing out there. How's title business, Greg?
Yeah, it's doing great. It's a lot of changes, but this is cool because I don't ever usually get to sit next to a fellow native.
Oh yeah, that's right.
Yeah, St. Joseph's Hospital.
Same here.
They just fist bumped.
Same here.
Wow.
St.
Wow.
Joseph, yeah, but mine was 10 years earlier, '68, so I got you by a couple of years.
Really? I never pegged you
For an old man, yeah. I know,
wow,
right?
you look good. All that Botox paying off, buddy.
Yeah.
The facelift, the Botox. Title is kind of weird right now because we're going through obviously a shift in the market, and we're just doing our best to kind of help the agents that we work with shift through that. And then there's people like Mike who've got it already figured out, who are willing to help people and show them the way, and hopefully that's what we can do too. So there's a lot of things we can still do. I think a lot of it's for agents and lenders is just getting back to basics because we really can't control the market, right? So we can't allow the market to control us.
Yeah, absolutely.
Which I think is what you said.
That's
earlier,
great.
right?
That's great.
Yeah.
Hey, Mike, why don't you? So you had a shift in your business, you said as well. About a year ago or something, or last summer? Why don't you explain that a little bit more and how you've kind of shifted to some of the investment side too?
Well, I mean, speaking of shifts, I mean, 98 to say, 2006 was mostly traditional stuff. I built my business on open houses. That's all I did was open houses. They're free, find a good vacant open house, go sit it. And I basically lived my first, 9 years in the business doing nothing but open houses. And that's why I grew it. And then, of course, we had the big shift in '07 and '08, all through 2010. But the investment thing kind of started back then when the first shift happened. I met up with a guy and, we started raising some money out of Canada when the, rates were good. The exchange rates were good back in '08 and '07. And all of a sudden I started getting all these Canadian clients, and we kind of converted a lot of those clients into friends and investors after that. And we started buying a bunch of homes when, Johnson Ranch and Pinal County and all those places, there was like a ghost town of neighborhoods. And we were getting homes that were $250,000 for $50,000, and
Wow.
Putting $5 grand into them, and then just flipping them back to Canadians. So it was Canadians that were buying them with us, and then we were just flipping them back to Canadians that were buying them for second homes or rental properties. And so that kind of started a lot of the investment side of things back in '08. I got a Wells Fargo account, REO account. in '09 and 2010 for a couple of years, doing evictions and managing their assets from cash for keys all the way through remodels, and then listing them and helping them sell them on the flip side of things. So kind of with all that knowledge and everything else and the relationships we had, we started Phoenix Native Properties back in 2010, and we did probably 200 fix and flips from 2008, 2009 all the way through 2016. And then the trustee sales kind of dried up when the market got better. So that was kind of our primary buying source was the trustee sales. So when those dried up, we're like, okay, let's try something different. And we started buying properties for Airbnbs. So we got a little portfolio of maybe 10 dozen Airbnbs in Scottsdale and Phoenix. And that was really good. That worked out really well. But then, the HOA started coming down on us and all that kind of stuff. So we just said, we'll ditch the Airbnbs. We sold them all off. And just this past year, my wife was like, hey, dealing with all these buyers in this market is such a huge waste of time. It's so difficult to get a buyer under contract. Why don't you go back doing some fix and flips? And so had to put a little bit more energy because the trustee sales are still dry. So we started getting into, other stuff like wholesales and direct to owners and things like that, and just started doing more fix and flips again. And it's just completely changed my whole business right now, being on the selling side. It's taking control back of my business instead of the market, controlling my business.
Yeah.
So I'm interested. So how are you in today's market then? What are you doing to find these deals?
There's a lot of guys do a lot of the dirty work for me.
The wholesalers.
Yeah. I mean, there's 24 wholesalers in town that, back in the day, were sending me dozens of deals every single day, and none of them were really all that good at deals. I unsubscribed to all those because it was just mind-numbing trying to go through all that stuff. But now that we're back into, doing more fix and flip stuff, those guys are, I get, again, I filter through 40 or 50 of them a day, and I just bought one yesterday, and that was the first one I've bought in over a month. So I'll go through those, I'll get 500 deals sent to me before I find one that fits my numbers, my location, things that
So I'm curious, what are your numbers? I mean, is there like a minimum that you're looking to make?
I usually take if my AVR value, my after rehab value, is a certain number, I'll typically try and buy at 75 to 80% of that value.
Okay.
So if that gives you kind of a good, the one we just bought was about 77, 78% yesterday AVR.
That's good.
So you have systems and formulas already in place that you can just plug the numbers in and it pops it out? Or?
Yeah, I've got a net sheet that I, just a regular old simple Excel sheet that, here's what I think I can get it for. Here's what what I can buy it for. Here's what I think, a 1,400 square foot house is going to cost to rehab.
Yep.
Now,
do you go through gutting the entire thing, or are you just trying to get it look just paint and tile and
it all depends, right?
Yeah.
I mean, so I got 4 going right now. 2 of them are over $100,000 rehabs where we had to put sewer in and rewire the whole house. And one of them in Scottsdale, we took a enclosed garage, and we were hoping that was where the water heater used to be. It was not.
Oh, no.
So there wasn't any water lines in there. We had to put water lines in there. We had to put sewer in there. So we try not to typically get into that kind of stuff because it takes so dang long and it's so much more expensive.
Yeah.
But I'm not the rehab guy that's like, putting on a huge addition in Arcadia and adding square footage and, doing all that stuff. I'm usually the cosmetic guy. I'm 30, 40K, is what I like to go rehab wise. Maybe 100K, 120 if the numbers work and we can get the property for that good of a deal.
Got it.
Yeah.
All right.
Oh, that's great. And you also are working on some multifamily. Is that what I hear?
Yeah. We got two projects going on right now. we're really excited about Camelback Lofts over by GCU. It's literally a block from campus, the GCU campus, and just an old, vacant piece of land forever. And we picked it up a couple years ago, and we're just getting ready to break ground on that next week. We're super excited about that. But it's just, getting through city permitting and all that kind of stuff right now is just a nightmare.
Yes.
I mean, we bought that piece of land in December of 20, and we still haven't broke ground.
Wow. So
Yeah.
when do you think it's going to be completed?
That's going to be our general contractor on that was just projecting about 6 to 8 months.
6 to 8 months.
Build time.
Yeah.
Yeah,
So about a year.
We're hoping to be about done. Yeah, right, exactly.
2025.
Are you finding any issues with materials?
Oh yeah. I mean, so we had pricing on. We're doing a different project over on Baseline and 32nd Street over by the Raven, a 30 townhouse unit project over there, and we had pricing on that thing April of last year, and it was the build cost was $10.2 million to build all of that for vertical, horizontal, the whole 9 yards, right? Just got updated pricing a couple weeks ago, and now it's $11 million.
Wow.
So, it's definitely
Yeah.
it's
So is this a buy and hold project? I'm assuming for a little bit at least, your exit strategy?
well, we thought about that initially, but right now the market is there's such high demand, there's such low inventory
Yeah.
for available housing out here right now. We're like 80,000 units short still, just
Yeah.
in Maricopa
Yeah,
County
that's
alone.
crazy.
So, rents are way up, and there's a lot of buyers out there doing forward purchases right now where they'll literally buy the whole community, get it in escrow, and all you got to do is build it for them, and they'll close, as the project continues, and they'll rent out the units as the project goes along. So there's a lot of interest right now in multifamily out here, and so we're leaning towards probably just either doing a forward purchase on it, or just building it and selling it off, and letting the end user, rent them out and manage it.
Sure. No, that's good.
Yeah.
Yeah, the multifamily is crazy here, especially in the valley, right? So, we weren't I'm looking, but I can't find any. that at least makes sense. So I'm looking where Jeff now lives in Missouri. Prices are a little bit better, but it's starting to get a little crazier, right, Jeff?
Inventory is way low here too.
Yeah. Wow.
Absolutely.
So, can I ask a quick question, because this is something that I get asked a lot, and we've hired Tina Tambor from the Crawford Report to do a presentation every single Monday, and we have for like the past 80 weeks. It's becoming ridiculously popular, and she's amazing and unbelievable at what she does. Like one of the smartest people I've ever met. But I want to get an opinion from you, being a professional, and from you guys. Is there a bubble coming? Because that's the question I get asked all the time. And if you tune in with Tina, she'll say not yet, and she backs that up with a lot of data and figures. But just your gut feeling, what are you guys feeling here? And because you're on the investment side a lot.
So, my partner in Phoenix Native Investments follows the Crawford Report like weekly.
Okay.
Is obsessed with it, and so,
I am too.
Yeah, and so he, as we get more deals in the pipeline and we're buying more properties, he's always kind of looking out, and he sends me updates every week. Here's what Crawford says. Crawford says we're probably good for at least another 6 months, just based on his or what he's seeing and what Crawford's saying. We're good for at least another 6 months. I have my clients ask me all the time, because I still do investments, but I also do a lot of buyers and sellers as well. And they're always asking me, hey, what do you think is going to happen? And after going through 05, 06, 07, it's a question you got to answer pretty carefully, right?
Yeah.
Oh, it's just going to keep going high forever. Like, no.
No, it's
That
not.
doesn't happen.
Real estate goes up, it goes down. It's just cyclical. It's how it happens. What I'm seeing though is over the last, 5 years, 6 years, when the market's really kind of gotten taken off here in Phoenix, I haven't seen a single zero down sale.
Nope.
I haven't seen any subprime loans.
Nope.
I haven't seen any kind of stuff that I saw back in '05 and '06.
Yeah.
People have money, people have credit, so when you talk bubbles, I don't think it would be a credit bubble.
More of a correction, not a bubble.
It would be probably more of a correction. I think it would be an interest rate correction.
Yeah, interest rate correction and pricing correction.
Yeah,
Because
correct.
when the interest rate went up just a little bit, people were like, oh. So as flippers, as investors, we're like, oh, we got to be careful with that, because our bottom line is how much how much we sell it for,
Yep.
right? So yeah, I think it's just going to correct itself, and the shortage of homes right now. I mean, as you mentioned, 80,000 short, right? It's different from 05 through 09 or 07 or 08,
Yep.
right? So it's different from then. So it's a little bit harder to tell the bubble. And Jeff, I know, is a big numbers guy and a big Cromford guy, so there's probably indicators that'll help with that, right, Jeff?
Yes. Yeah. Well, this
Yes.
week, this week alone, I know the Cromford update that Security Title had. Tina actually mentioned that as of right now, it's cheaper to rent than buy in Phoenix.
that's crazy.
She brought that up.
Yeah, that's nuts.
So what? And I'm in Missouri, so it's a little bit different. But yes, we have a low inventory. I think there's just so many different variables at play compared to 2007 and 8. It's a totally different situation. If some of these economists that are predicting rates to go higher than inflation to get this thing under control, then who knows what we see. There's just one thing that I know after being in banking and mortgage and real estate for 20 some years now, 22 years, is nobody really knows what's going to happen. So even me, I tried to guess certain things back in the past, but at this point, I'm just like, you know what? The only thing I can do is watch the indicators, watch what's happening, but there's no way for me to say, 12 months from now, we're going to be in a recession, because I don't think any of us truly know. And I think that was very evident in the last one, because you had the Federal Reserve chairman saying nothing was wrong, and the subprime housing wouldn't cause, an overall impact in the economy and all that. So even the best minds don't get it right. So anyway, that's my 2 cents.
Well, thanks. I just wanted to bring that up and see what your guys' opinion are, because I value it.
What are you hearing, Greg?
I'm a Cromford guy, so I've been doing this 25 years, and I've seen the same things that you guys have. And the only thing that I don't think is in the data is the human emotion. And the only indicator that I don't think you can put on paper is when Nancy sees Susie list her house and not get 20,000 over what she thought she would, and then okay. So then Nancy lists her house, and then the other neighbor down the street lists her house, and it's almost like a domino effect, right? And I don't think any prognosticators can put that into their formula. Like, what's the human emotion?
Yeah.
No,
I think you're right on.
Back
because,
in 2009,
I think it's Robert Schiller, maybe, that's said a few times that psychology can be a stronger factor than the economy itself.
Oh, absolutely. I'm just thinking back in 2008.
And he's written, some books. Irrational Exuberance is out there. I don't know if you guys saw the report from last week from the Dallas Federal Reserve Bank, actually saying that they are seeing a bubble in housing. So they have a lot of variables they're looking at, but yeah, you're right, Greg. I think that psychology, the psychological aspect of what people see, animal spirits, I guess you could say, as Robert Schiller says too.
So that's why I watch both. I love
right?
Tina, and I encourage anybody who wants to get on the Cromford Report. We do it every Monday. Just, I'll have my information at the end. I'll send you a link. But yeah, I just think we need to mix psychology, emotion with Tina's unbelievably great data, and then see what's going on.
Mm-hmm.
Yeah, well,
All right.
I know that being also helping buyers, I don't like to work with buyers now, but only because it's so crazy.
It's hard.
Don't send this to your clients, Joey.
Yeah, I know. Well, it's only friends and family usually that'll help. Anyway, going to open houses and seeing 50 people in line, that tells me, okay, well, the market's still hot. So being in in the actual industry and working it, that you can really tell. And then, having to make offers a minimum of 50,000 over asking price, even 100,000, and still not getting accepted. That's still telling me something
That's
that
tough.
it's still pretty good.
I wanted to bring one thing up because both of you mentioned buyers, and I think this is kind of weird because I've never seen this in my years. We have a couple of large builder accounts here in my office, Fulton and Shea and a few others, and I'm literally seeing, like, don't quote me on this, but I think like 50% of all the escrows we're getting, the buyers aren't represented by agents. And so I think there's an opportunity there. And I think what it is agents are like, well, I don't want to work with buyers. I don't want to work with buyers. And so the buyer's like, okay, well, I'll just go by myself and go to a new build. Do you find that fascinating? I mean, I find that fascinating that 50% of the people aren't even being represented. And that scares me.
Because it's a waste of I hate to say this, but it's a waste of time sometimes. You're going
to
out
take them to new builds?
Yes. Because if there's a lotto going on there, just go.
Is that what it is? Okay.
There is a lot of lotteries going on. Yeah, there's huge wait lists. There's lotteries.
Yeah.
I mean,
It's tough.
Yeah.
So, Mike, asking you, I know that you're doing.
Can I just?
Yeah, go ahead. Jump in.
On that last point, as far as working with buyers right now, there's an interesting trend. There's more and more companies that are basically nationwide lenders. So there's one in particular. Have you guys heard of a company called Homeward?
I have not.
So
I think so. Yeah. Are they helping people buy without having to sell their house or something?
That's correct. Exactly.
Yes,
Jeff.
I've heard of that program
so
too.
There's like 3 or 4 companies out there right now. There's like 2, I think, or maybe 3 in Phoenix. And what they're doing, it's a really interesting concept. I've got 2 of my buyers that are qualified with them right now. Haven't gone through the process yet, but so far it seems pretty good. What they do is, okay, so say you've got a $500,000 buyer, okay, and you've missed out on what, 10, 15 offers at this point, and they're conventional, putting 10% down.
Yeah.
Okay, you're toast in this market. Normally, that would be a fantastic buyer to work with. Right now, there's no chance. And in that price point, there's multiple cash entities that are in town right now buying up everything they can buy.
Yeah.
Every listing I get, I'm getting 3 or 4 institutional cash offers for at or above my asking price.
Yeah.
And from there, those are just they hit my MLS, my inbox. The second my listing hits the market, I get 4 or 5 cash offers from these guys.
Yeah.
So the strategy, if I was a buyer's agent and if I had a buyer right now in this market, you hook up with these cash companies. Is what they do. They come in and they buy the house. So your offer is basically like this Homeward company or some of these other companies, and they'll buy the house on behalf of your buyer, right? So they own it, right? But they have a contract with you that basically you're going to buy it back from them. They charge 2 points. They're obviously I can't quote them,
Sure.
But that's what they're working with my buyers right now is kind of where they're at. They charge 2 points for this fee. So on $500,000 house, my buyer's it's gonna cost them $10,000, unless they use Homeward as their lender to buy it back from Homeward. They waive the 2 points.
Oh wow.
And they're nationwide lenders, so their rates are just as comparable as any other lender out there right now. So all of a sudden, your $500,000 buyer becomes a cash buyer. And if they use them for their financing, then all of a sudden, you've...
Yeah, my buddy from Caliber, we were just talking, and they're coming with a new program too. They actually buy your listing and then let you, I don't want to misquote it, they buy your house for a certain amount, give you the cash so you can make a cash offer, and then they'll resell it. And if they resell the house for more than what they purchased it for you, like say it takes 4 or 5 months, they give you that extra money. They don't even keep it.
Yeah, that's
so it's
on the flip side of the play, right? So so it's removing your
it's an interesting
contingency in that
program.
way. Yeah.
I was like, wow. Okay, so I could sell my house, stay in there, use that money for a cash offer, and then Caliber will resell my house, and if they make $50,000 more than they bought it for, I get to keep that. It's like, yeah, We don't want to make the money off
Well,
that.
on the other side, I was helping a buyer to where we got a hard money loan, and his regular lender or a lender is working closely with the hard money. So when the hard money loan closes, or when the house closes, then they immediately start the refinance process. Yeah, so they're also a cash buyer that way because they're able to close pretty quickly. So
Yep.
I
Yep.
thought you had to live in the house for a couple of months before you could refinance. No,
not with some, with some.
and
of the-
obviously I'm not a lender, so I don't.
yeah, it all depends. It all depends.
I don't know.
Anyway,
The only downer to, I guess, that particular situation is then you are getting refi rates instead of purchase rates.
yeah, that's right.
Yeah.
With the
Yeah.
lender.
Yeah,
You know.
yeah.
So,
It's a little bit higher.
But you got the house.
but you get the house. Yeah.
Yep.
Isn't it crazy how this market just has so much just outside the box stuff going on right now?
And that's the good thing about real estate, right? You always get to.
It's just creative.
Yeah.
It's creative,
Yes, it is
right? I mean, what
creative.
we've all been doing this for 20 years, and every single transaction, we're learning something new. There's
I love it.
always
I love that, though.
something new or weird going on with every transaction.
Yeah,
It's crazy.
absolutely.
Scary.
It is. It is. You know what, guys? To be perfectly honest with you, I despise this market.
Even me too.
I want the 1998 market. I want the 2002, the
Don't we all?
2014.
Yeah.
Where houses appreciated 3 or 4% a year. I used to tell my clients when I'd sold them a house, I said, "Don't call me in 2 years because you can't pay for my commission unless you've held it for at least 2 years, and then you're at least broken even."
Yeah.
Now it's like you sell
Call
it
me
6
next
months
month.
later. Yeah,
Yeah.
for sure.
Crazy.
So
Can't we? One thing we do know is it can't keep that same pace.
No.
no, and then hopefully sooner than later we can get back to some level of normalcy.
Yes,
here.
please.
Yeah.
Yeah.
I mean, the house we sold in, before we moved out here, I mean, it went up 40% in one year. It
Yeah.
was just insane.
Should have held on.
Yeah, yeah.
Insane.
Well,
Anyway.
I got a question for you guys. So, what do you guys think caused all of this? Because going back to December of 2019, okay, I had this, fix and flip I was doing in Scottsdale, and right in the thick of it, $100,000, kind of a big one, and margins were really good, and this and that, and COVID hit in March, right, and I'm freaking out. I'm mid remodel. I'm like, oh crap, this thing is just gonna
Yeah.
tank, and oh my gosh, and so I listed it and got out, right, and that house is worth a gigantic amount more than what I sold it for, and so it's just interesting to me that we go through all this, but nationwide, the real estate market doubles,
Yeah.
triples in some cases in the last 2.5 years. How does that happen?
Well, that's a tough question to answer, I think, without bringing politics into it, and I'm not going to do that here.
Well,
But
I
I
think
think-
one thing that's pretty obvious is anytime you keep interest rates at record lows, it causes bubbles in asset prices. I mean, that's just the way it's always worked. If you go back to 1900, something I recommend everybody to watch is a documentary about the Federal Reserve and how it works. It's called Money for Nothing, a look inside the Federal Reserve. And it goes through all the booms and busts from 1900 till the last housing crash anyway.
That's a
So
crazy,
it's
interesting
just,
documentary, by
You
the
know,
way.
I know that's one factor
So you
for
seen it?
sure is you keep interest rates too low for too long, and you're going to see asset bubbles no matter what. As far as the coronavirus thing, I think everybody thought that the market was going to crash when COVID happened.
Yep.
And it did the opposite. People wanted out of their apartments and they wanted more land, more room. They wanted offices now in their houses.
Yep.
So
And then you have
it's
the
just a whole
supply
different dynamic.
shortage.
Plus, then the fact that people can move to different parts of the country because now they're working from home. So I don't know how this all shakes out. It's going to be interesting 5 years later to see, okay, where did all the migration go? Where did people go with being able to work from home? So
Well, right now, from the Crawford report, I think she's saying that right now they're coming from Washington and California, just hundreds of families a week, right? And because you can work from home, this is a desirable place to be. I mean, you can be outdoors year round.
Well, but the
there's
crazy
still
thing is
land here.
California is crazy too. Nationwide it's crazy almost. So
Yeah, and
is it people moving here? Yeah, it makes Arizona crazy, but how about in California? That's still crazy.
well, if you're not building, I don't know, right? If you're not building enough houses for the amount of people that are being born, I guess,
Sure.
and a 2-year hiatus of not being able to work. I mean,
Yeah, but did our
That's gotta-
population triple in the last 2 years?
No, it hasn't. It actually
So where are
slows.
these people coming from?
It's slowed down. I mean,
know.
the only other thing we can think of is people coming into the United States. I mean,
Well,
that's-
you got to think about the age group though. So you've got your millennials that have come into
That's true.
that age bracket where they're ready to buy. So
Yeah.
now you've got the millennials, the Gen Xers, and the baby boomers all homeowners, right?
True.
Or trying to be homeowners.
trying to be. There's just not
So-
enough houses.
So you've got your baby boomers holding on. They're going to stay. A lot of them are going to stay in their houses because they've got such a low rate now. And then you've got the millennials wanting to buy. Of course, a lot of them won't be able to afford the house prices we have now. So I don't know. It's going to be an interesting ride. I can tell you that for sure. And it might not be a very pretty ride at some point, but
It'll be interesting.
Yeah.
yeah, we'll see how it goes.
All right. At least we're not.
Mike,
all
anything
doom and
else
gloom.
you want to share with the agents that are watching, listening before we get into the last segment here?
You know, stay creative. You know,
yeah.
stay creative. Think outside the box. You know, there's so many new companies like Homeward and these other companies that are out there that you can use as assets in your business. And take your clients that you have good relationships with, like the two equity partners that I have on both those multifamily projects are two different Canadians that I started flipping homes with back in 2008. And I sold them a couple properties out here as second homes, developed that relationship, into a friendship. And then, we've done 20 flips or 30 flips with them over the years. And then now that's evolved into multifamily. So, leverage your relationships with your past and current clients into opportunities for them and for you.
Yeah, that's good.
Very good advice.
Absolutely. Absolutely. All right, guys, you ready to get into the ring?
Let's do it.
Let's
Let's
do it.
Here we go. All right. So, and you can both answer if you want, or just one or the other. Doesn't matter. What do you think a reason is that many agents are not successful?
Consistency.
I was just going to say the same thing. Stay
All right.
consistent. Yep.
All right.
My mom
How
used
about a
to
book
tell me.
recommendation?
My mom used to tell me back in the day. This is 98, 99, right? I would, and so Greg, how many agents do this? I was doing this as a kid. I still was doing this a few years
going
ago.
to get me in trouble?
No.
Okay.
No. So I do a few open houses, get a few buyers, get a couple escrows, stop doing open houses.
Yes, right.
Yes.
That's usually how it works.
Yep. Absolutely.
And then next thing you know, you find yourself with no income, no buyers, and no pipeline.
Yeah.
And so, consistency, I would say. Yeah.
And that goes, I think, for anybody in the industry. That goes for the title reps like me. It goes for the lenders I work with, the agents I work with. Got to stay consistent.
Yep.
Got it. How about a book recommendation?
Crushing It by Gary Vee.
It's a
That's
good
what
one.
I'm listening to right now. But I've also You Are a Badass by Jen Sincero. Love that book. Been listening to that. Ray Dalio's got a new book out. So I'm a guy that my university is in my car when I'm driving. So I'm all about Audible.
There you go.
Really good friend of mine, Kevin Kaufman, a few months back recommended Average Sucks. Michael, I forget his last name, but the book is called Average Sucks. And it's a fantastic book about developing communication and just understanding. And it's not so much about, being average sucks. It's your current average sucks. And we all get, drawn into our brain is wired to keep us comfortable, and that sucks, because if you ever want to really accomplish anything outside of your normal day-to-day stuff, you've got to get past those fears that your brain likes to keep you locked into, your comfort zone. So it's a phenomenal book, Average Sucks.
Awesome. All right. How about Apple or Android?
Ugh, is that even a question? Come on, Apple.
I got a really funny story on this, actually. I have had an Apple for 10 years. and I like Apple. My GC for these multifamily projects called me a word I probably can't say on the podcast for having an Apple.
How about a sheep?
Why don't you become a man and get an Android like real men do? Quit being
Yes, baby.
Quit being a kid.
See, they know what they're talking about.
So I go to my local T-Mobile store a couple weeks ago, and I get myself an Android because I'm thinking, you know what, I can handle this, right? My laptop is Windows, so I can do the Android thing. Dude, I didn't last one weekend. I had a new listing, and I had 30 agents calling me, texting me. I didn't even know how to respond. I'm like, I need my Apple back. I went back to T-Mobile on Monday. I'm like, I need my phone back.
Good for you.
I tried.
Apple all the way.
No, it's just like anything. You just got to get used to it.
Yeah.
And you know, with Android being a much higher technology than Apple, because Apple takes about 5 years to catch up with Android. So
Oh, jab,
Wow.
jab.
Okay.
Jab.
We know where he stands.
All right. Well, I like my Apple.
yeah.
So, how about podcasts or videos?
Video.
That's a good question.
Podcast.
Yeah, I guess it depends. If you're of course in the car, you're not watching a video.
Yeah.
Not
Play
yet.
it.
I don't have
Once you get
time
your
to watch
self-driving car.
I don't have
true.
time to watch a lot of videos. You know, I got 3 boys, sports, and wife and kids and the whole 9 yards. I'm very rarely in front of a TV. But I'm driving all the time, so I'm a podcast guy.
Yeah.
Awesome.
Is it wrong that I put my phone in my dashboard and watch the videos while I'm driving?
Yes.
Oh, you're that guy.
No,
You're
I'm
that
not. I'm
You're
just
that
kidding.
guy.
Just kidding.
All right. How about one last question then? What's one thing that you wish you knew about real estate investing when you got started?
One thing I wish I knew.
I wish
That's
I
a
had.
good question.
I wish I had about $300,000 in 09 and 10, so that I could buy the properties that Mike wants for 50 grand and then resell them 5 years later for 250.
In 07, no, it was 08. It was actually September of 08 when the market completely melted down. We were in Canada raising money in Alberta. We were in Calgary and then Toronto, and we were raising money. We were selling them all these fix and flip stuff, right? We're like, come down here, invest money with us. We can do fix and flips. We make money. We had guys that were offering to cut us checks for like $5-10 million if we would have put together a buy and hold fund.
Wow.
In 08 and 09, and we're like, no, we can make way more money on the fix and flip stuff, the buy and hold stuff. I mean, look, we can make 10 times more on the fix and flip in 1 year than you could in a buy and hold.
Yeah, when you start to understand the tax ramifications and
Yes,
everything, you're
yes.
just like, oh man.
That's a good thing to have known back
Yeah.
then.
That I would have been a little bit more. I probably wouldn't be sitting.
I was gonna say you
right now.
wouldn't be sitting here right now.
That's a great question, Jeff. This is a new one that we've asked, and I think just thinking about it, there are 2 things that I wish I would have known. Number 1, do it sooner, and then number 2, let numbers talk, not my emotions. So.
Oh, 100%.
And that's getting back to the
great,
bubble thing with the emotions. You got to factor
Absolutely.
that in.
Well, thank you guys so much for being in here. Oh, need to give a big shout out to Security Title Agency and Fidelity
Yes.
National Home Warranty for sponsoring the show. But we appreciate you guys both being on.
Yeah, thanks, Jeff. Thanks for having me.
Absolutely.
Oh, appreciate it, man.
Absolutely. Great
Love this.
information. So until next time, agents, we will see you later.
Adios.
Take care, guys.
Take care.
Have a good one.